Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. It's February 6th. Downpouring here in Southern California, which is a good thing for us. We've been pretty dry for so long, and this year we're getting a lot of good rain. So, anyways, jump right into it. Sorry about that. We have no economic news releases scheduled for today. We got just pretty much headline stuff climbing in today. Stock market is currently down. It's kind of taking a little bit of breather since there's really no data to come in that's going to help drive it. So pretty much just taking its cues from politics or political stuff and earnings reports. And today earnings reports came in a bit mixed. So it's kind of right now at a little bit of taking a breather today and taking its cue from the mixed signals today. Also Friday, as we mentioned, we had the jobs reports were released. So obviously job creation was looking pretty good. We had a good job creation, but the wage growth was looking a little bit coming up a little bit slow. So that might translate a Fed hike pretty slow. It might be more of a moderate pace if that continues, because what happened is rapidly. That means obviously inflation's employment wages aren't going to drive inflation. Excuse me, I'm having a hard time getting that out there or trying to construct it there. But basically, wages won't drive inflation in this scenario, so that will help to moderately pace the Fed with their rate hikes. So right now the Fed next meeting will be March, and there's about the Fed funds futures are showing about a 10% chance of a Fed hike in March. June, however, does show a 60% hike, but with the data that comes out in between, then obviously could lower that or raise that. So we'll have to kind of wait and watch our data as we proceed, especially on the wages, since jobs seems to be growing quite a bit here. So let's kind of move forward here with the bond market. Bond market, we're actually doing pretty well today. We're up currently about 16 basis points from where we left off last week. We're just above the first level resistance. Also at that first level resistance, it's been that real difficult barrier, the 50-day moving average. So right now we're above that. If we can stay above that, especially for 2 days to show consistency, then you might see a nice little rally going. But as you can see, that 50-day moving average, every time we've approached it, we've got beaten down quite a bit. So one of the things that's helping us today is that the Fed's, the New York Fed's buying about $1.625 billion worth of mortgage-backed securities. So that's helping drive demand today. So we'll have to kind of wait and see how we close, as well as tomorrow where we start the day, and if we can close above that 50-day moving average. So if we can get that today and tomorrow, again, I think we could see a nice rally. If not, if we pull back underneath it, expect some more of this pushment towards the lower end here with rates going up. But today, rates are a little bit better than where we left off on Friday. All right, folks, so that's really about it today. Again, it's kind of a slow week this week. We really don't have a lot of data coming out. Last week was kind of jam-packed. That's why we had a lot of volatility. This week will probably be more cues of policies. Trump's supposed to be releasing a preliminary budget, so that's another thing to watch out for. Especially, they're going to be watching those real carefully. That could also drive the markets a bit as well. All right, folks, so if you guys want to get more updates throughout the day, just go ahead and stop by Twitter. I do post on Twitter throughout the day, and you can get more updates even past this video when I do this in the morning. Have a wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Bye-bye.